Hello, everyone. I think that's working now, and it started broadcasting. So, welcome to the last live update of the week. We do these every day for the moment. So Monday to Friday, 12:30, 20-minute look at what's going on with the major markets. So we look at euro, pound, gold, oil, and some of the stock market indices. If you just bring up the risk warning while I'm talking, it's been an interesting week. I'm going to talk a bit about levels today because we saw some of the levels that we were talking about at 12:30 yesterday. Did a great job as the day went on. I'm a big fan at looking at previous levels in the market, so I'll talk a bit about those today because it worked out pretty well in oil and the pounds. I think over the last 24 hours. So we'll take a look at that. It's been something of an odd week for stock markets. I mean, they've been drifting for much of the week. Yesterday was a bit of a nothing day in the end, and the DAX in particular has had quite a move so far today. So it's woken up at the end of the week, but it's been a bit of a drifty week. But we'll take a look at those in a bit more detail. So let's get started. Let me drag our trading platform across. Let's start off with oil. We had oil inventories yesterday. So every week, normally on a Wednesday, the US announces effectively how much oil they've got stockpiled. And it came in bigger than expected, but the market went up. I was reading lots of news today saying, oh, the oil sold off. It sold off, I think, with sort of 10 minutes, the following 10 minutes when the number came out. But it has moved higher overnight. But what I wanted to talk about, it's just that level we were talking about yesterday. And just, I think one of the problems when people start trading, there's so much stuff out there to trade that it can be confusing to know where to start, and I'm a big fan of focus on one or two markets, if that, or maybe just one, but look at big levels. And yesterday, I was talking through yesterday, I said we'd sit, this is an hourly chart that we've got here. Let me just pick up on the level just to see what we're talking about down here. Pick up on the horizontal line. So what day is it today? It's Friday today. So this was on Tuesday. So on Tuesday, the oil price sold off to $52. And it sold off, and I said I'd be looking for a buying opportunity, but the market turned around really quickly and traded up to 53.5 by Wednesday. Wednesday, it sells off again in the afternoon, and this is what we were talking about yesterday. So it sells off again in the afternoon. It has a little look through that low from Tuesday, but it turns around pretty quickly. So I said, well, it looks like it's a false break. And yesterday, when we were doing the session yesterday, would have been about here. We'd have been in this hour, and I was saying that's the level to watch for today, going into the oil inventories. And you can see it worked pretty well. The market did tickle a little bit lower between 1 and 2, so traded down to 52.12, but was strong into the inventories, and we had a bit of a push higher overnight. So we ended up getting almost a $2 move off that level. So I think, so even though I have all the squiggly lines and the oscillators at the bottom, I think price action is really important, and it is underestimated by a lot of people. So I think that 52 level is still the one to watch. I'm not quite. I was trying to find out why the price of oil was up at 2 o'clock this morning. I don't know if there was some Chinese data out, or maybe some other data out from Asia. But anyway, it blipped higher to 54. It sold off. I mean, it's lost nearly $1 during the European session. But going into this afternoon, I mean, I don't think there's much major in the way of economic announcements this afternoon. So maybe there won't be that much volatility this afternoon. But going into next week, and we'll take a look at these when we do the sessions next week, if we drift back to the low 52s again, it starts to look interesting. I think that recovery, that incredible recovery that's been going on since Christmas Eve, is still just about intact. Clearly, it's lost some momentum this week, but you can see how 52 is an important level. We got support at 51.20, and for me, the big support is $50 a barrel, near enough. I think if it dips below 50, because it's a psychological level, that could kick off some more aggressive selling in oil. But for now, I'd still be favored to buy the dips, okay, but not at the moment because it's still weakening. But I just thought it was interesting how that level played out. So we'll come back to it on Monday see where we are on oil. But for me, for now at least, that the bias has been up. The real strong performer of the week has been pound US dollar. So I mean, it's been volatile because clearly it is driven by all the Brexit craziness, what's happening and what isn't happening stuff. But it's had. I mean, look at what's the run? Where were we a week ago? Where did it finish on the 18th? So last week the pound finished off at where was it? 128.50 ish, and we're at 131 now. So we've moved 250 points this week. That recovery is still going. You know, I think I've been saying all this year that maybe all 3 weeks of this year, maybe the pound is the surprise outperformer in the next 2 months. You know, we know the worst case scenario is a hard Brexit. The market knows that. And maybe we'll end up with something better, you know. So I think that's definitely help lift the pound. But we do have some hurdles coming up. You know, for me, it's still a buy the dips market, but we've got the highs from November at just ahead of 132, then just above 132, 132.50, October highs, and then September highs at 133. So there's definitely still scope for a bit more headroom from here. Still be looking to buy the dips. It's looking pretty overbought on the RSI, but again, in strong trending markets, you know, that doesn't matter. The pound does not care that its 10-day RSI is overbought. You know, if the path of least resistance is up, it'll keep on going. But again, just picking up on the level thing. Yesterday, when we were talking about this during yesterday's session, where was it? Down here. You know, I was saying, well, maybe 130 is a level to watch. We'd seen the pound sell off, and we were sort of here, I suppose, yesterday, January the 24th, here. Watch the 130 level because it was a bit of support back here. Clearly, it's a psychological level, and it did a great job. You know, it came down to it at 1 o'clock. It came down a bit later on, 10 to 6 UK time, and ended up springboarding like 150-point rally, you know. And I think it's levels like this are great because they give you obvious places to put your stop loss rather than, I think, picking a stop loss randomly, which I think a lot of people do, you know. So I think look at obvious big levels. We've seen, I mean, a bit of support here. When was that? 10 o'clock this morning, ahead of what was pretty quiet support last night. But so the latest support 130.60. But I do think we could have a quiet afternoon now because there's not much in the way of new announcements. The euro was a really odd one. We were watching that yesterday on the interest rate decision. We saw plenty of volatility off the back of that. There's the decision. Let's just zoom into it. So it came out at sorry, no, that's the press conference. So that was the decision was here. 12:45 was the decision, and then it sold off into the press conference, rallied a good chunk. From 113 up to 113.80, so an 80-point move, and then just collapsed in the afternoon, gave it all back and a bit more, and today it's been recovering again. I think it's quite a frustrating market, this. I think if we flip this over to a daily, you know, the range this week has been pretty tight. We had that explosion of volatility yesterday. So far, at least, these old supports are holding, and you know, I think, you know, 112 needs to hold. The lows from November to suggest that we're not going to see a deeper euro US dollar sell-off. So for me, going into next week, I would be expecting some euro strength. I was expecting it this week as well. We had 3 days of nothing and then a burst of activity, and it's pretty much back to where it was the middle of the week. But let's see what happens. So coming into next week, the levels to watch: 112.60, the lows from November, and the big low in November, just ahead of 112. Okay, so we'll see what happens. And let's take a look at gold. This is another one, I think, that hit a big level and held, yes, a short-term level, I should say. I think it was something that somebody mentioned in the chat yesterday, and we looked at it in a bit more depth. But you know, just to recap on gold, that recovery is still going. It's going from those lows in August. So that's still chugging along. But I think what's interesting this week, if we flip this over to an hourly chart, so we had the lows on, that's Monday, isn't it? So Monday's low ended up being really important this week. So Monday's low around about 12.76. The market rallied up to 12.85, sold off to 78, and then yesterday So about 1 o'clock yesterday, again, hit almost exactly the same level as Monday's low. So 1276, I think for short-term traders is the one to watch for gold. We've got lots of support anyway. If we take the chart out a bit and go back to the beginning of the year, 1276, 1275 has been a really important level. So short-term, I think that's a key level to watch. If it can break back above these highs from midweek at 1286, 1287, I think that could well be the start of a run back up to 1300. So we'll see, but I think that it's been I suppose that is quite a bullish week for gold this week. We had slid off and we've stabilized. The bigger picture, looking at the last 6 months, is still positive, although it is admittedly, overstretched in comparison to its trend line from August. But for me, any major weakness back to the mid 1200s looks like a buying opportunity. But in the short term, I think it's been interesting how that Monday low has been an important level all this week and continues to be, sort of 1276, I think. Let's take a look at stock markets now to wrap things up. And there's a couple of questions coming in. We'll take a look at those. I'll answer those when I've had a look at stock markets. Let's look at the DAX. The DAX has been really interesting today. So we were looking at this level yesterday. Where was it? Where are we? So yesterday, what time was it yesterday? So 12 o'clock yesterday, looking in on the live session, and I was saying what a problem 11,150 had been all week. So if you make this a 5-minute chart, it's maybe a bit clearer. Here we go. So where was it? So that was yesterday. That was yesterday's session, and we were seeing it bumping up against this same level that had been bumping up all week, 11,150. It did sell off in the afternoon, and then rallied later on in the session. And today it's just gone like a rocket. So it's really has burst through that level today. The DAX, 11,150 was the level. Gaps open, you can see it gapping open here, and it hasn't looked back really for much of today. So the US stock markets have been positive overnight, but not to the extent this one has. There was some European IFO economic data out this morning, and I'm wondering if that was the catalyst. But it's a really strong move by the DAX. Let's flip it over to an hourly. So it does extend that recovery that's been going since December the 27th. So that's bullish. Levels to watch going into next week. If it does sell off to this week's lows, near this week's lows at 11,000, be watching for a bounce. There are hurdles. There's a big hurdle left up here, beginning December, around about 11,560. And if we look at the daily on the DAX, that trend, I think, from June of last year is still very much intact. So it's still thinking it's a bit vulnerable to a sell-off. But in the short term, the move today is an impressive old rally. That is, so pushing up to, what is it? Is it highest levels since early December? So let's take a look at US markets, just to do a bit of a comparison, because we have seen, like I say, a bit of strength overnight. Here's the S&P 500. So a little bit of strength overnight in the S&P, but nothing like what we're seeing in the DAX, and it's just pulled the S&P back to where it was 3 days ago. We're not back up to sort of early December highs back up here on the S&P. So let's see if the DAX can hold on to that. So yesterday, I am actually still short the S&P from yesterday. I think I went short near the open here, and it moves a bit, and it moves a bit, and it's a little bit against me now, and it ended up being something of just a dull day yesterday. If we look at the trading yesterday, it stayed within the high and the low of the day before. So that was yesterday's session. You can see well within the high and the low of the day before. So a really low volatility day. It does. It's breaking above those highs from earlier in the week. That does look positive. To setting up for today's session. Let's see what happens. But on the dailies, it's been there we go, a fairly uneventful week so far this week. It is looking a bit overbought on the dailies. With the highs set last Friday at 26.76, they haven't been broken. Let's just flip this over to an hourly to take a look at some of the levels. I suppose an aggressive trade here would be to be a seller, which I might be slightly biased by because I'm short anyway, but to be a seller with a stop loss maybe above the highs from, is this Tuesday's highs. maybe somewhere at sort of 26.60. But let's see what happens. Maybe after a dull few days, it's going to spark some sort of volatility off this afternoon. But yesterday was a pretty dull day, and it has been, I think, something of an uneventful week for stock markets, apart from the DAX today, really getting a move on. So what to watch for the rest of the day? Oh, I think stock markets, see how they trade this afternoon. That oil price after that big move overnight, and it sort of selling off now. See how deep this sell-off goes. Do we see buyer? If it gets as low as sort of 52.50, 52.40, do we see buyers come back in? But I think we could be set for maybe a bit of a quiet end to what has been at times a bit of an uninspiring week. So we'll come back on Monday and see how it is. Right, so let me just deal with some questions. I bought a few sell positions in the DAX, but it seems like a wrong decision. I think it depends when you bought them, but I think it does highlight, so it's FARS asking that question. If you're gonna do a trade, you need a strategy for getting out if it doesn't work out. And I think you need to have some sort of, I would suggest some sort of stop loss in place. So for example, let's say we were going to sell the DAX now, where it is now 11,282. I would think, well, the first thing I would think about is, okay, well, where's my stop loss going to go? And I think the logical place for a stop is above the highs for the day. So if it goes higher today than today's high, then I'm wrong in selling short, as a short-term trade. I think whenever you do a trade, you've always got to be thinking, well, where am I going to get out? If this doesn't work out, where am I going to get out? And I think I've seen too many people over the years lose months of profit in one trade where they wouldn't get out of it. Yeah. So whenever you do a trade, think, right, if I'm getting in here, where am I getting out? And put the stop loss in would be my suggestion. But let's see. I mean, it depends where you sold them, doesn't it? I mean, it's been a little bit weaker over the last hour or so. Let's see what happens. If US markets sell off hard this afternoon, that you would expect that to drag the DAX back. What are your views on Aurora Cannabis? I have got no idea. Let's have a look, shall we? I think we've listed a load of cannabis stocks. But I must admit, I've never looked at them. So let's have a look. Wow, look at that. That is crazy, isn't it? So it went from, is it in Canadian dollars? I don't know, I can't remember. So it went from 3 in October 2017 to 15 by January. Wow. That's incredible. But now it has, clearly it's just calmed down now, isn't it? It's trading more like a normal share. But it's pretty volatile, isn't it? It's a pretty volatile share by the looks of it. It's gone from what, six wherever they are. Is it 6? I'm guessing it's 6 Canadian. I don't know. So it's gone from 6, the lows in December, to as high as 10 this month. So it's a pretty volatile one. I suppose the argument is to be a buyer. So it's sold off from 15 as low as 6, arguably building a base at 6, blipped up to 10. It's sold off and it's having a positive day. Or yesterday it had a positive day. So for me, if I had to do a trade on it, I'd be a buyer. But the closest I want my stop is probably below these lows, below these 6 lows from December. But yeah, crazy market, but pretty volatile, isn't it? So there we go. Let's see. We'll come back to it. Let's come back to it in a month and see what it's doing in a month's time. So much in the markets is chopping up and down at the moment. Do you know of any charts in a long-term up or downtrend? It's a good question, isn't it? I don't know. I think, you could argue, I looked at this for something I did this week. The S&P 500, I don't know how much data we've got on it. But if you go back to, we don't go back far enough. If you went back to the 2009 lows, the S&P is still in an uptrend, and it's just bounced, or it bounced. The sell-off into December was the bounce off the longer-term uptrend line. But I know what you mean. I think in other markets, like with oil, we had a great trend last year from October to December, and it's sort of turning around. The same sort of thing with gold. But I think it is quite scrappy at the moment. I think in all sorts of different markets. That gold trend is a good trend, I think. But then I have bought, from August last year. I think that's a good trend. So, but it is definitely, I think, a bit harder than it was a year ago to spot these trends. Right, I think that's it then, isn't it? That's it for this week. So we will do it all again next week. If you don't have an account, go and open an account. You know, we don't do this for the good of our health, clearly. So if you go and open an account at Capital.com, you get access to all the charts and all the stuff that I go through today. And if you download our app from the App Store, whether it's your Apple, iPhone, iTunes, whatever it's called, App Store, or our Android, you can have the app on your phone. And we do push messages from the app. So I work with the marketing team, and we'll send out push messages if markets, you know, let's say if the pound hits a 2-month low or oil bounces off support. So there is a bit of value add in having the app as well as using the desktop. We do push the messages through the app. But any questions, drop me an email, david.jones@capital.com. See you all again, hopefully on Monday. To never miss out, just subscribe to our YouTube channel. We did put, actually, for the person who asked about the DAX earlier on, I did put, there's a video gone up this week. I think it's at about 1,000 views so far, where I talk about stop losses. So if you have 10 minutes, maybe have a look at that. If you're not sure about stop losses and why we should be using them, just take a look at that. But if you're subscribed to the channel, you'll get a push off YouTube whenever we go live. But I'm planning on doing, I think, them every day again next week at 12:30. So we will see where we are on Monday morning. Okay, have a good weekend, everybody. Thanks for coming along, and see you next week.